All right, good morning, good afternoon, good evening. I am a couple of minutes early. Let's go take a look at the calendar and see what we have going on today. I hope everybody had a good weekend. There we are. Looking at Monday, we had a couple of speeches. We have Brazilian news, top of the hour, and then we're in the clear for about an hour. And then we'll have to be looking out for these bill auctions here. All right, so that's that with the calendar. Let's take a peek. Last week's trades, last Friday's trades right here. The stuff we did within that 2 hour window closed at 3 a.m. my time, so at about 5 a.m. New York time. And then these are the trades that I have from 6 days ago. That's the experiment that I'm working on, trying to figure out the swap business, how much it's costing us or costing me. And so, for example, this trade here, 6 days open, it costs $1.27 in swap, even though it closed at 3 pip positive. So I'm just waiting to see what these ones here will look like. Long story short, let's go back. Oh, there's a box. So if we look at today's market, these trades here that I have are from that wick up there. So today's market is clearly higher high, higher low, right? Higher low, green overall. Let's measure this. 41.8, almost 42. We would expect 54, so we know we're missing a box or so, box and a half, maybe 2 boxes, right? So are we going to clear the high? Are we going to clear this? It would make sense, right? So let's go take a look at that intraday. All right, so right away we have a floor, we have a ceiling. I have this right there. Next one is the most recent one. And then we're looking below. All right, and then we want to look inside of this on a 5-minute scale in this area here. And then on the 5-minute scale, you start building the ladder that you would anticipate finding yourself revisiting. All right, so let's pick up a few more lines here, the clearly visible ones, the stuff that sticks out. All right, keeping it simple. All right, so from our top-down analysis, we want to be testing for a higher high. We want to break the previous high from 6 days ago. Right, we're trying to go here. All right, so let's see if we can go there. Right, and if we do go there, how far away is this? That's a half a box. Right, so if we do make a full box, we'll end up above that high, and then we have maybe to stay up there to remain bullish. All right, so if you remember last week's plan is to sell from 835 or so. All right, so we still want to be sellers. Right? We still want to be sellers temporarily, even though this might be going up to 110, 111. Right? We do want to sell for the top of the wick, right? The wick that's expected to come in on this daily candle. Right, so our expectations for now is a little move higher in the course of the next, few hours, and maybe a pullback. Right, so if we look at this on an hourly, we're looking at something like this, maybe a move higher, and then a pullback. All right, we're playing for that wick on the daily candle, we know when it comes to an average day, we have fulfilled 3/4 of the average. Right? And we're only missing a couple of boxes, if that. Right? So we're not going to the moon. And so let's measure from this low. The market has already gone up 1, 2, 3 boxes. And then from here, we are pulling back. Right? So that's the top of the hour. And the pullback typically leads us into the bottom of the hour. Right? So for the next 30 minutes or so, we would want to see ourselves pulling back and taking advantage of that pullback in the bullish bias, right? So if we can see an opportunity to buy it for cheap, right? We don't want to buy it when it's at the top, but instead, if I can buy it at support, right? It's just an assumption. What if support is here or even here, right? And what if the price comes to support and bounces? That bounce has the ability to make us 3 pips. And if we're wrong and the market continues to go down, we'll test the same assumption at the next level, right? And then this is just to expect or anticipate the next move, right? So as we speak, we have to wait for a move to one of these 2 lines in order to be able to trigger a trade. All right. All right, so let's go take a look at the dollar index while we're here, which we do every day, right? So our dollar index is back in below the moving averages. Our moving averages are crossing on the 4-hour chart. All right, so for the institutional traders, the guys that trade those higher time frames, that's attracting their attention right there. Right, so now we're looking for a lower target. In the end, this may even go slightly lower, like 103, 103.50, depending on how we adjust this.
So oil prices extend gains, with US crude futures rising by $1 a barrel. Session high of around $79.28.
Right, so if we're breaking here now, we would be looking to go down to 103.50, and that opens the door for the euro to find its way up to 111, 112, maybe even 113. Right, so this will happen in the course of time, if it happens. So we have to remain grounded, We have an idea, but we're not betting everything we have on the idea just yet, right? So if I can get a buy here, that'll be the first trade of the day. All right, so I just took a trade right here. Typical target. Stop losses right there. Now I'm looking for a small bounce. Weaker dollar over time. We're heading into PPI and then CPI. All right, so we're heading into a lot of US news this week, which may give us a lot of volatility, which is good for us, right? Short-term traders, we want to be participating on average moves, things like this, things that are measured, right, over and over and over, and we want to be able to see the calendar provide some of that volatility on schedule. All right, so here it is approaching that second level that we're looking for. So that becomes our second click in this box. All right, so now we have 2 open trades. Nope, and we may get a third. I have 3 open trades, right? I'm looking to my left. I'm buying this stuff here. That'll be the 4th right there. All right, so now I have 4 open trades in this upper box. And going into the bottom of the hour, right, I'm expecting a pullback up to this area here. All right, maybe a half a box in time, another 30 minutes. Right, so I'm willing to buy another 4 clicks here. All right, the idea is that I'm thinking we're trying to complete a full average day, and we're trying to do it to the upside. Right, so I'm willing to buy, postponing gratification for what's coming next, right? Or move to the upside. Those that trade stocks may have noticed GameStop triggered a circuit breaker this morning. Yeah. Weird stuff going on out there. Okay, so here we are on the edge of box number 2, willing to put box number 2 money in box number 2, right? And I'm also willing to spend in box number 3. And then if I must, I'll use box number 4, right? All the while I'm building a long position, waiting to get paid with what should come next, right? Ultimately, I want to be a seller from here. In that area there, if I can be short just temporarily, not forever, right? I'm not thinking we're going back to the sell pull. I'm actually thinking this has enough legs to go up to 112, 113, right? So we have to give it the space it needs. All right, so here we are in the lower box, near support. Let's find support, right? Near support. That would be an awesome little spot to take a trade. All right, and then where would plan B and C?
As from year-to-date gas exports to China grow 37.4% year-on-year.
There's nothing in between here. Actually, that's not true. And then we might even be able to split the difference. All right, so we have 4 clicks in box number 1. We're ready to put 4 more in box number 2, so on and so forth. I uploaded last Friday's video to YouTube this morning, so if you want to go and review that, subscribe, like, ring that bell thingy. And while we're here, I got to remind you guys, I'm just some dude on the internet. I don't really know what I'm talking about. I'm just showing you how I do things. So this is not financial advice. You are taking the risks if you follow. So far, so good. You know, if we just go back and check last week, this was Friday, Thursday, Wednesday, Tuesday, we had one big loss, which I mismanaged. I forgot I was in a hedge and left the stop loss on. And oops, actually this can get away. And this was Monday. So if I show up on schedule and I exploit time of day, I tend to have better control over my expectations and my risk. Like I kind of have an idea of what I'm walking into. I've traveled the same road over and over. It's like my commute to work. And because I'm not reinventing my commute to work, I'm just dealing with whatever inconveniences happen to creep up. Right. So this is what I hope to be doing. Right? I don't know which way, but that's the amount of time I expect to spend. Right? I'm willing to go all the way at lunchtime. I'm willing to go all the way to 4 hours, but 2 should be plenty to, extract from the casino before the casino wins. Right, so we built a position on the way down, and now we're waiting to get paid. Right? If it goes down some more, we build a little bit more. Let's plan ahead while we're here. That might be something to look into. If we go here, if we go there. We just don't know what the market looks at for support / resistance. Right? It looks at everything pretty much every 3 pips. And so we're just making a whole bunch of assumptions. And all we end up doing is testing those assumptions as the market, pushes through. Right, so remember the ladder that we built? We came down 1 rung. Let's see what comes off of this. This is the high that we need to break. And then I want to be selling from the next 2 boxes above here. All right, let's close a couple of winners. We're 17 minutes in. I'm trying to figure out how are we going to come out of this box. Is it going to come here? Is it going to come over here somewhere? Or is it going to come back down? Again, I'm just thinking out loud. I have no clue what I'm doing.
Yellen says Biden's top priority is bringing down inflation. The Treasury Secretary Yellen is currently speaking on Bloomberg TV.
Let's see. Curious to see what will come of this. All right, so we have plan B, C, D, E, all the way to Z if we must, or Z, depending where you live. All right, and then we're hoping to be done before lunchtime New York, which happens to be 10 o'clock my time.
Taking a look at the Fear and Greed Index, 53 out of 100 equaling neutral, and the Crypto Fear and Greed Index, 57 out of 100 equaling greed. And looking at the VIX, currently up 6.61% at 13.39.
Go. Gold is pulling back a little bit. Yeah, I want to start selling the euro. If I can get out of these, if I can get up here, you know, anything above 08, we need to start thinking about selling. Right, it's considering the size of the daily candle. Right, by the time we get there, we will have fulfilled an average daily range, and it will be almost due. I hate to use the word, but it's kind of what we're doing, right? We're expecting the next move as a result of completing the current move, right? So if we can complete the current move, which would be 54 pips, that leads us above our blue line. Right, that leads us above that previous
Treasury
high.
Secretary Yellen says it's unacceptable to be dependent on China in key industries.
And we want to be selling above that last high. Right? This might be going up and up and up, but we're only selling for a couple hours. Right? We're only selling for today, now. Right? If we get up there, we have to get there first. That's why we build this ladder, and this is why we look at the ladder on the 5-minute scale. All right, 9 pips apart, 8.5, 9.8. We did that with our mind's eye. And this represents the same average with an end instead of lines running on forever and ever. So this is dynamic. I can move it around like a measuring cup, where these lines are static. Beautiful.
And Yellen says we do not wish to disengage economically with China.
Things are falling into place for most of you. I see in the testimonials folder, you guys are putting in some good results.
And Yellen says any steps on China should be targeted and not broad-based.
I get goosebumps when I see you guys working this out by yourselves. It's awesome. Right, so remember, selling after or anything above 08. Right, so we want to be sellers, and we'll have 4 boxes of sells, of space to sell into if we have to, right? From 08 to 08.35, we want to be participating on the short side. 35, right there. This is a target we've had since last week. It comes from, if I remember correctly, It comes from a Fibonacci on a higher time frame. I think we're targeting something up here. Sorry, I was looking to my left. At 835, right there, 61%. All right, so we want to be selling up here. It's a matter of getting there. We've taken over the 50% today. We may come down and test 79. All right, that's the bottom of this box here. Right, so are you willing to spend to have it go back up? Right, that would be testing that 79 area here, and then to go back up to 61. All right, so we're just thinking ahead. We're coming up with alternatives, right? Plan A, plan B, and then whichever corner you get pushed into, you kind of have a strategy to get out. You have something to do. You're executing your next best move instead of, you know, cowering in the corner. Right, we're approaching the bottom of the hour. We may be closer to the end of the pullback than we think. We'll have to wait and see.
And Yellen says tax revenues should be used to lower the deficit.
All right, 3 more minutes, 4 more minutes, and then it'd be nice to see the market go up from here. But, oh, darn it. We are ready either way. All right, if it comes down, we have money to spend with a good cause. If it goes up, we're closing trades, enabling us to recycle trades, also with a good cause. All right, so let's just wait and see what comes next. I'll remove this because it's annoying. Okay, I want to see us go up the ladder, go up the rungs. There we go, first trade of the day. Yay. We are all winners. Bottom of the hour, second trade. Fire this puppy up. Full speed ahead, Captain. I'm just measuring this right here. This seems to be a low. Trade number 3 just closed. Can we close trade number 4 before we recycle? All right, so now we have 3 clicks to put back in. Wham bam. Come on. Right, trade number 4, they're tickling it. Just tickle, tickle, tickle. Right there. 2.8, 2.7, 2.8, 3. There we go. All right, so I'll put the box there and pretend that we're breaking up. All right, so if that's a break up, I have to basically wait for the red candle to pull back, the retest of the break. Oh,
Yellen says if Forex interventions happen, they should be for excess moves.
unable to break, red candle. I'm recycling one trade. All right, I'm putting one of the 4 back in, and if we continue to go down, I reopen the other 3.
Brent crude futures rise by $1 to a session high of $83.82 a barrel.
Right, remember, selling will become critical up here. It's because of what we have on the calendar, right? We may end up the week higher, but for now, we have to compensate for this.
Yellen says interventions should be rare and communicated to others.
As if they don't have each other's phone numbers. Communicate to us. Red candle, take a buy. So that's my break even, making up for 4 trades and the 2 from today. Let's go take a peek and see what we did last week. Does it show me last week? This is last Friday. 45 pips. Yeah, it's too early. All history in the account, $1,700, almost 5,000 pips. All right, so imagine scaled up full size. You guys would be rocking this thing. You'll get there eventually. All right. This is just like going to the gym for reps. Red candle, click number 3. If it goes just slightly lower, right there is good enough. I'm buying this area here, right? And I'm willing to put a 4th click in. Fourth click coming up. Right there. So now I have 4 clicks in this box. I'm willing, able, and capable to put 4 more down here if we get there. All right, so I ended up buying this, and I have 4 clicks above that zone here. Looking to see if we can go up and then become sellers in this zone up there. All right, we're planning for the next move. The current move is always coming to an end. Our job is to figure out how and where and when that is. That way you're ready for the next move, right? You're positioned. It's not a surprise. All right, the whole key to this strategy is to make your average number of trades or number of pips do whatever it is you do on average and walk out. All right, so if you don't know what your average is, you need to collect some data. Right, so you have to force yourself to leave the casino every day. All right, we are not swing traders. We can't be in trades 24 hours a day. All right, just a little push higher will enable us to start selling, right? Retesting that previous high, and anything above it is a sell. And not for the South Pole, right? We're selling at the top, maybe for 2 boxes, maybe for 3 boxes, right? We are expecting higher highs later.
The UK DMO may syndicate 2 UK gilts during July-September quarter.
Come on. It'd be nice to close more than just 4 trades on a beautiful day. Slow. All of a sudden, we're just creeping. Trying to keep it simple. Check the history of stuff. This is the start. Let's go to the beginning. So these are the trades that I paid swap on. Right, so these closed in 3 pips of profit, but with 6 days of swap, I ended up negative. All right, a little bit more, a little bit more. Ay, ay, ay. There we are. Come on. Bars are just shrinking. What's going on? It's not even one pip. What a tease. Bars are smaller than the average. There we go. Somebody woke up. Red candle. 1, 2, 3, 4. I already have my 4. Oops. That has to stay there. This one can move. All right, we're slowly going up the ladder on the 5-minute chart. And so just for those of you that came in late, we're just trying to test this previous high, and we want to sell above that previous high. And we're not selling for the South Pole. We're only selling maybe to retest the break, or maybe to retest support / resistance. No, we're selling this temporarily. Here we are. Five. Now expecting a break up. Perfect. The news calendar, or even the squawk box, is pretty mild right now. Really not much going on until the top of the hour. Went out for brunch for Mother's Day, stuffed my face. Man, oh man, I haven't eaten so much in a long time. For some reason, I was starving. Man. That was nice, nice little outing. Mother got everything she wanted. Shrinking volatility. Waiting to see what comes next. Right, I move back to the bottom of the box or break up into the upper box. And then that sets us up for the next move across. Holy, come on. It's like they're on to us. Just kidding. I just want to take another trade if I can. A little bit lower lower than the previous low would be awesome. I can recycle this trade here. Come on. Boom. Just like that. Well, the channel only needs 19 more subscribers to be at 1,000. It's not bad at all. I started the channel I started uploading in November. So, yeah, cool, yo. Right on. Thanks, everyone, for subscribing. We'll keep it moving. Send the elevator back down. So I have my 4 clicks in the box. I'm waiting for the next box. Let's see, where's that calendar that I had? Some consumer inflation expectations, right? Service-driven economy. Let's see what happens here. Right? We have about 10 minutes or so. Let me drive the market. That's what we want. All right, more of this. Come on. I want to recycle some trades. This is why I find myself running multiple platforms. Similar trades, different purposes. Maybe different boxes. A box within a box.
So in 10 minutes time now, at the top of the hour, we expect the release of the New York Fed inflation expectations.
Market mover. Will it get us on top of that blue line? No, we are still missing. We're looking for 54. And we have 42, 43. We're missing one more box. I suspect we'll get above the blue line. It might just go sideways from there. We might just get up here and then slowly waffle our way. I doubt it's going to be a rocket ship. Could be way, way wrong. Right? This looks very familiar. Right? Rising wedge. There we are. Yes. Let's go, let's go, let's go. Right. We still have a lot of runway. So when this news comes along, it may give us the opportunity to become sellers. Right. Up here somewhere. Ideally, we'll have closed our open trades just in time for the news. the lead up to the news. If you have clicks to spend, pick up some support. Curious to see what will come of this in 5 minutes. Right, so we've had 1, 2, 3, 4, 5 winners. We're in line for 4 more.
Goldman Sachs Solomon says the US economy is chugging along in a pretty good shape.
Funny how he says that 5 minutes before the news comes out. Convenient.
So in 5 minutes time now, at the top of the hour, we expect the release of the New York Fed inflation expectations.
What will come of this move? Just when I'm looking at this here, it's only 9 pips or so, 10 pips. Right? An average leg should be 2 boxes, maybe 3, right? Just like this one back here. And so if this was a pullback, then the next leg might take us 61%. That the next leg may not happen all on the North American session, right? So it may take hours to go there, maybe even into tomorrow. Right? In the meantime, we can start playing the short side. Three minutes, 4 minutes. Remember that inside bar business we were dealing with last week? We're still there now. We're just about ready to break out of measure bar. I'm waiting to see the news. I want to close some trades and then do whatever's required. Ooh. About 2 minutes. Very nice little wedge. Right there. It reminds me of It's the same. Oh, excellent. Okay, we'll do that later, I guess. This is one of the favorite patterns that I keep an eye for. It has a very high probability of success in one direction versus the other. It's still only a probability, so it's not a certainty by any means of the word. One minute.
So we're shortly expecting the release of the New York Fed inflation expectations. Should be just under 1 minute's time now.
Surprise. Off it goes.
Ten seconds. So for the New York Fed, the April year ahead, 1 year ahead inflation expectations, 3.3%, so which is up from March's 3%. Also seeing the 3-year ahead, that's down at 2.8% from March's 2.9%. A 5-year ahead inflation expectations, 2.8%, also up from March's 2.6%.
Kind of dull. We have to give it some time.
So more in this New York Fed report then, as respondents see higher future prices for food, rent, medicals and gas. So again, expected future spending level rises.
You heard it.
In this New York Fed report as well, the year ahead expected home prices are rising to the highest level since July of 2022.
There's click number 5 for me. I'm going to remove this so I can see to my left. Slow and steady. Oops, I changed the size. We just gotta hold on.
So again, inflation outlooks are rising here, fueled by expected increases in housing costs, again, according to this New York Fed survey.
Opportunity to pick it up cheap. Here it comes. Alright, so we played the pullback.
I've also posted out the New York Fed survey of consumer expectations on the feed for anybody interested.
And so now we have the news, which may give us 2, maybe 3, maybe 4 boxes. Right. Remember this, that remains the goal, right? Let's not give up on the goal. Here we are. This is something we looked at earlier, right? Here's all these levels we highlighted before. I'm buying the red candle in this area here. All right, so now I have 4 trades up top. I have 1 below. This was a move, about 14 pips. Let's see if we can get it to 18 pips. 780. All right, right around here. Will it drop 2 boxes? Will it give us the chance to buy 2 boxes? All right, I'm just gonna take away these ones and put them back if we get there. Right. If I go here, I put another, this will be 3, and this will be 4. Remember, postponing gratification, right? That's kind of what we do. This is what drives everybody crazy. Those of us with a plan, we're executing our plan. And so this kind of a move is a trigger, it's a call to action for most of us. A lot of people will see this as an excuse to chase this to the south side. A lot of people are selling this because it's red, 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 making lower low. They may be right, but we may be right. So it's this idea that at some point, both of us may be right. You can be making money counter trend. You can be making money with the trend. How do you perceive risk? And where do you see the risk? Personally, I'm willing to buy. All the way. We don't want to give up on Plan A. Plan A is this upper box there. This is why we have Plan B. Right? And then the two boxes averaged together gives you an exit somewhere between the two boxes. And so by the time you average all 8 clicks, the market doesn't have to go to the moon to get you out. The market only has to retrace maybe half the distance. Another 20 minutes and I'll have to let you guys go.
Treasury's pair gains after inflation expectations gauge rises.
Right? The willingness to buy when things are falling, it's because we have a ultimate goal to this, right? We know this is not on the way to the South Pole. Right? We are looking at a weakening US dollar, and so we're just taking advantage. You know, we are opportunists, and we're trying to see where's the best place to buy the euro, right? And so we're making assumptions. And along the way, some of those assumptions make us money. And at the same time, some of the assumptions are held back until, you know, hours later or minutes later. We're definitely not right all the time, right? But if you average it, we're right most of the time. So here's the ladder that we built. Here's the Fibonacci that we drew. We're not that far off. I'm keeping it simple and just using your mind's eye. Oh, there we go. Trade number 6 just closed. We get to recycle it. If I can see red right there, perfect. I just took that same trade back on again. What are we looking at now? We are looking at 22 pips. If we drop a little bit more, maybe we can make it 27 pips, which would be 3 boxes. Anything can happen. We're just using this to anticipate what may be next, right? Is it coming to the bottom of the box, or is this it? And we're going back up from here. Now, that means we're coming here. Right? That's the idea. We're using the box as a frame of reference. Right? It's just telling me what could happen, what's normal. these two alternatives, right? We could come here or we could go here, and both alternatives would be normal. All right, let's see what comes next. We want to keep buying support. That's something we are well aware of. Red candle. I want to see if I can get trade number 2 on here. Trade number 2 in box number 2. If it goes, near these lows here, I'll trigger a trade. We're trading probabilities, and so there's always, there's always the odds that we're wrong and the probability just doesn't work, and we have to learn to deal with that, kind of stoic about it. We don't have to freak out. And if you size things appropriately,
Fed bids for 3-month bills total $7 billion.
Remaining stoic is not that
Fed bids for
difficult.
6-month bills total $7 billion.
It becomes a challenge when there's too much money on the line, then your brain can't think clearly. Right? If you keep things really, really small, really, really cheap, manageable, consistent, and you earn the right to grow, you'll end up a better trader in the end. Once we close today's trades, I'll be able to upload the video. Today's trades are here. And so I'm looking at a move from where we are of about 13 pips. All right, so if I can get a retracement of about 13 pips back in our favor, a continuation, I should say, then we're in the clear. About 920. Looking sharp. See how they trick us, right? They shrink the size of the bars, and then you're left sitting there looking at a beautiful pattern, beautiful setup, except it's now taking forever to come to a conclusion. And so they kind of get under your skin, and then you start to second guess yourself, right? You start to second guess your plan. You're looking at the clock, you have other things to do, right? And so the debate is always valid, you know, should I stay or should I go? And if you have a choice, take risk off. You know, there's nothing wrong with removing risk from your equation. A lot of guys will be tempted to put more risk on, right? Trying to move the average to speed up the exit. That may not be the case when the bars are shrinking. Right? You might just be putting more risk for no exit. That's why we keep an eye on the clock, you know, the news, the volatility that the news tends to deliver or not, and then deal with the facts. Right? The bigger picture is what we are building. We happen to be building it 1 minute at a time. So that involves a lot of potholes, a lot of pullbacks, and you know, what looks like, oh, it's a reversal only to be a false break, or you know, lots of illusions. If you follow the box, those illusions are limited to one box at a time. And whatever happens within the box, as long as it's in line with the plan, tends to make you money. And then the way you stack the boxes allows you to manage risk according to how you see fit.
At 11:30 a.m. Eastern Time, we get the US 3-month bill auction. Prior high yield 5.25% and a prior bid cover of 2.72. We also get the US 6-month bill auction. Prior high yield 2.91 and a prior bid cover of 5.155.
Yeah. About 8 minutes or so, 10 minutes, I'll let you go. And the plan is the same. You know, we're not changing the plan just because time of day passes on, right? It remains the same. We're trying to be sellers once we break this previous high. So let's go back here. Actually, let's go to a higher time frame. Boom. Easier this way. Let's do this. Let's put a line right there. Let's change that to blue. So we're just trying to make our way to this blue line or above, right? So that would be sweet. Right? Anything up there, you want to become sellers. Okay, fellas, ladies and gents, traders alike, right? We find our way up there, you sell. And you're not selling to go back to the moon. You're selling to leave a wick on the daily candle. Okay? And so basically, we would suspect
US Eagle forward oil output due to rise in June to the highest since December 2023, according to the EIA.
We would suspect that because we still have not fulfilled the average daily range, we will go back up, maybe fulfill the average daily range, and then
US Permian oil output due
leave
to
a
rise
wick.
in June to the highest since December 2023.
Okay, so we're looking to go up, right? Fulfill the average daily range and then short it. Okay, fellas, this is it. Enjoy yourselves. Good luck. All right. If it drops lower, we're buyers for the next two boxes. All right. So we're already in for two. We're willing to be in for the next two. Enjoy yourselves. See you guys tomorrow, same time. Okay. Good luck, everybody. Bye-bye.